YouTube. Welcome back to the Investing on a 9 to 5 YouTube channel. It is your boy, the Dividend Dog. What is going on, guys? Happy October. Thank you guys for joining me on this video today. I promise this will be a quick one here on one dividend growth stock that I'm going to be buying here in October. Once again, this is top financial advice, but sit back and I promise this will be worth your while. Thank you guys for being here. Don't forget to hit the like and subscribe button so you do not miss out on any future updated videos. So let's go ahead and take a dive into the ticker V for Visa. As many of you guys know, Visa is a global payment technology company that facilitates and electronic funds transfers worldwide, basically making it easier for consumers and business and governments all over the world to do their business and transact secure funds and do all that stuff efficiently. And they also have a focus on innovation and securing, obviously, those funds during those transaction processes, to different individuals and enterprises and so on. So one cool fact that I put down here on it is Visa has a net revenue of $32.7 billion. $212.6 billion of transactions were processed on Visa's networks this year currently. Over $12.3 trillion worth of payment volumes also. So as you guys can see, Visa does a lot of business with businesses, consumers, and they have a lot of cash. First up, the reason why this is an opportunity, because I think the DOJ is out of their mind for trying to sue Visa for saying that they're monopolizing the debit card markets and yada, yada, yada. It's not like consumers have someone forcing them to say, hey, I need you to use this Visa. It's like you go to a bank and you get a debit card and that's what they give you. It's not like they have a choice. I'm like, well, I'll take this MasterCard debit card today, or I'll take this Visa card. That's essentially, I don't think that's how it works. If it does work like that, let me know in the comments. But I think this is just another fluke to create an opportunity for us long-term investors to buy a beast of a company like Visa and so on. A couple months ago, they were messing with NVIDIA, right? If you guys are invested in NVIDIA, that huge AI company, year to date, they're up 117% right now. They were saying that they were a monopoly, telling them that they were forcing their customers to use their product. Jensen was like, no, we just have the best products out. And I feel like that's the same thing with Visa and MasterCard and so on. Why aren't they messing with MasterCard? Who knows? They're both duopolies, meaning like they're both monopolies in the same way, and they work together to make this whole thing spin here from a consumer standpoint in the markets. So let's take a look here. So Visa closed out around 276 today. It is target price to go to 307.38. Got 11% target, from a percentage standpoint, if you were to purchase it right now. Nancy somehow figured that she can sell at the top here before it went all the way down to the bottom. She's currently, she's always trying to find a way to cheat the market. And every time she sells, the thing goes down the next day. Very weird. Do you tell me what's going on? Maybe someone knows something that we don't know, right? But anywho, I think it's a fair value right now. Not financial advice as always on this channel, but it's got a peg forward to 2.2. As you guys know, anything at or below 1 is really, really worth value. But anything over that, you got to know what you own and why you own it. And obviously, we know we own Visa, so I'm not really worried about the peg forward here at being 2.2. It's got really good earnings per share. This current year, 24% clip. The 5-year earnings per share growth estimate in the next 5 years, 12% double digit. Sales growth, 9.7%. Like I said, they're hovering it to be at a 282, 307.38. And I got another stock price, later on in the presentation here that'll show you guys maybe a little bit different price here. Last 5 years, 64% return, 26% return the last 3 years. The last year, it's up 21%. As mentioned before, like I said, guys, they're a global network, brand recognition. They have an extensive network. They operate one of the largest payment networks in the world, connecting millions of merchants, financial institutions, and consumers, more than 200 countries and territories. It provides Visa with a significant competitive edge in terms of reach and accessibility. It's got very brand strength, so people trust when they see a Visa, or you go to and hand someone your Visa card, there's more likely they have that brand strength there that they trust, like wearing a pair of Nikes over Reeboks. You're going to have that brand strength as one of the most recognized brands and trusted brands in the financial industry. Scale and market leadership. It holds a dominant market share in the global payment industry along with MasterCard. Nothing against them. It's a large transaction volume and extensive cardholder based on economy scale, allowing Visa to operate more efficiently and cost effectively than many of its competitors. And it also has strong financial performance. From a technological standpoint, it's continuously investing in cutting edge technology, AI to help prevent fraud, provide top tier security. Financial institutions, have strong network with different networks of financial institutions, with banks, credit unions. These partnerships, like I said, helps Visa expand their reach and offer a different wider range of products and services to different consumers who are in need of their services. And like I said, they have different technology and fintech collaborations, such as Apple, Google, Samsung Pay. They have collaborated with Visa to make it easier for them to handle do card holders to make it secure and convenient contactless payments using their smartphone and wearable devices such as the Apple Watch. Amazon Web Services, AWS, is partnered with Amazon to help them leverage their cloud computing and data analytics capabilities. Like I said earlier, global banks and credit unions, they have a strong relationship with these vast networks to help provide products and services of payments. Fintech partnerships such as Shopify, Square have also integrated its payment solutions into various financial products. And these partnerships help drive innovation and once again, help expand Visa's presence in the digital space. Walmart and Costco have their credit cards and so on, exclusive benefits to the shareholders, that shop at Costco and Walmart and so on. So let's do a quick check here. Quick heat check profitability standpoint. Visa has had positive earnings in the past year. They've had positive operating cash flow in the past year. In the past 5 years, V has always been profitable. That's good for investing. Make sure we're investing in profitable, growing businesses. And each year in the past 5 years, V has had an operating positive positive operating cash flow, which is good to see. As you guys can see, from 2014 to all the way to 2023, and I'm assuming for this year too, this number is going to continue to rise up. Return on assets, return on equity, return on invested capital, all double digits, which is good. Even in the last 5 years, they've double digit returns. This is why I am keen on buying this company while it's below the $280, below $300 mark. I really think this is a very, very valuable company that's not going anywhere in the near future. They've also been buying back their shares, even though the price has been going up. They're continuing to buy back more shares, which is good. Like I said, with the return on invested capital, that's also creating value in the company. They got less shares outstanding than they did a year ago. The number of shares outstanding for V has reduced compared to 5 years ago, which is good, meaning that they are believing that the company is worth more than what it was 5 years ago. So they're going to continue to purchase down. And then also compared to a year ago, they've improved their debt to asset ratio, which is good. So price to cash flow is another key ratio that measures the Visa's company stock relative to its operating cash flow. For Visa, this price to cash flow has grown from each quarter, as you guys can see, from 2023 Q4, 15%, 2024 Q3, 12%, 2024 Q3, 12%. So as you guys can see, consistent double-digit growth here from a price to cash flow ratio for Visa. Growth prospects. Well positioned to benefit from different growth drivers to help drive, once again, that free cash flow to help return it to shareholders in a small dividend, or they continue to reinvest it back into the company, buy back the shares, and also pay down debt and also do acquisitions. So that's another thing why, Visa is so keen on getting the cash flow, keeping their operating expenses low. So therefore their net income and everything is higher so they can do more things with the free cash flow. The emerging markets, Visa is expanding its presence in emerging markets where the adoption of electronic payments is increasing. The technological innovation, invests heavily in tech to enhance its payment networks, improve security with AI, and offer innovative payment solutions. Now they have some risks and challenges. While Visa has a strong growth prospect, it also faces some certain risk. Regulatory environment. Visa operates in a highly regulated industry and challenges regulations could impact its operations, such as the DOJ saying they're a monopoly, or maybe MasterCard can offer different things to customers and so on and so on, which is why, competition is very highly competitive with players like MasterCard, American Express, and emerging fintech companies, could show up as competition. But I really think the brand loyalty with Visa is the one thing that's going to pay off and help them out in the long run. Forecasting all the way out to 2028 here. I mean, as you can see from revenue, from year over year growth, we're consistent. You got 11% year over year growth of revenue here, but we still got 36 billion to 40 billion, 44 billion to 48 billion here to 2027. Their EBITDA, 12%, 11%, 10%, 9.66%. Now, you're probably thinking like, well, it goes down to 9.6%, but it's still a consistent growth over time, leading for the next 4 years. Same with their operating margins. Crazy operating margins here at 67%, 68%, 69% here in 2027. And the earnings per share year over year growth is going to continue to do double digit growth as well, all the way up until 2028. So as you can see, even though they may be facing some small DOJ lawsuit now, which they've set the money aside to pay that lawsuit, and they're still going to continue to drive business, drive revenue, and continue to provide dividend and investors with growth, and dividends as well. Now, from a card standpoint, all the way from September 4th of 2014, all the way up until September 23, they've grown. The cards have grown, all the way from 2 million, 2.3 million, all the way up to 4.3 million here. Their transaction volume has continues to grow. Visa accounts for an estimated 60% of all debit transactions in the country, indicating a significant market share and transaction volume in the debit card payment industry. And this is why the DOJ is essentially coming after them, because they're saying, wait a minute, you guys can't own 60%, you guys can't do 60%, you got to share that with everyone else. Well, when you've been around for as long as Visa, when you have the customer loyalty, the brand, and the trust, and the technology to back up the security with all these transactions, I mean, who's to not trust Visa with their process? Another thing that I like to look at too is the retained earnings, on how much they are retaining from their earnings to either to save or give it back to us as dividend investors, as dividend raises, and so on. And one thing that you can look at quickly is to see if it's continuously to increase over time. Now, you may have some dips every now and then, but if you draw a line from here all the way up, you can see there's been a consistent growth over time for the, since 2004. They've had great sustained earnings going back to the dividend investors here, which is a good sign to see. Free cash flow it's been a bumpy ride, but they've had, once again, if you draw a line from here and go up here, and this is the TTM is trailing 12 months. So obviously the year isn't over, but they are going to continue to have increased free cash flow and have dividend raises, a lot of cash coming in through a lot of payments and so on. So Visa is, like I said, is going to continue to rock steady strong. And that's why I see this as an opportunity here to add it to your portfolio. Last but not least, I have another stock price target and forecast here for Visa. As you guys can see, they have a buy consensus of 81% are saying Visa is still a buy, even with the DOJ hounding down their back. Got over 20 analysts saying it's a buy. You got 10 analysts saying it's a strong buy. And now you have about 8 to 9 analysts saying that you maybe should hold it. But you don't see a sell or a strong sell. You see a lot of analysts here recently on the last part of the month maintains to outperform, maintains, and so on. And they got a high target price of about $357, 29% clip growth here. If you were to get in the stock either today or tomorrow, you got a median stock price of $318, 15%, and a mean here in the middle at $313, 93 at a 13.87% return. So as you guys can see, Visa, even though they are facing, the DOJ with the lawsuit of claiming that they are a huge monopoly, but I really don't. I really just think that it's just some hot smoke that they're just trying to do to pick on someone because they couldn't get NVIDIA, so they got to find someone else to go look at. They could have done the same thing with MasterCard too, and so on. But yeah, guys, that's all that I have for you guys today. I really do think Visa can be a prime dividend growth prospect here to add to your portfolio long term. I got 5 shares in the company right now. I'm looking to get as much as I can here in the next month, and more likely leading to the end of the year. I want it to be a huge entry here, or entity in the portfolio long term, because like I said, everyone's got a Visa or a MasterCard in their back pocket. And like I said, they're going to continue to increase that free cash flow. They're investing in AI to help protect the security. They have lots of acquisitions: Apple Pay, Google Pay, Samsung Pay, working with Amazon Web Services, working with Costco, Walmart, two of the biggest grocery retailers that customers use on a day in and day out basis for for basically their customers, essentially, when they sign up for their program. And guys, thank you for being here tonight on a Wednesday. I appreciate you guys for joining in here. Don't forget to like and subscribe to the channel if you haven't. And I am the Dividend Dog on X. And if you guys have any questions or anything, or compliments or comments or anything, leave them in the comments section below. And let me know if you have a stock that you would like me to go over for this month. And I will catch you guys on the next video. I'm out.